Welcome back, everyone. We're going to be diving into some pretty interesting stuff today. We've got market news, some tech developments, and even, maybe even a little social commentary, wouldn't you say?
Yeah, definitely. A real mix today.
Right. So, get this. Some investment funds are specifically catering to certain political or religious beliefs.
Really interesting trend.
Yeah. And we'll also be looking at, how some companies are merging to try to take on the AI wave, while others are actually going public because of AI. Kind of crazy.
Almost opposite ends of the spectrum.
I know. It's pretty wild. All right. So let's start with something that really caught my eye. Faith-based investing. It seems like it's not just about avoiding those, so-called sin stocks anymore.
Yeah. The Inspire 100 ETF, that's BIBL, and then the God Bless America ETF, ticker symbol YAL, those are managed by companies that are really carefully screening investments to align with very specific values.
Right.
So, for example, you've got Inspire Investing, and they use what they call an Inspire score,
Okay.
which basically reflects, biblical values. So that means they avoid companies involved in anything like embryonic stem cell research, gambling, or really anything that they consider, not aligned with their interpretation of biblical principles.
I see. So that's a pretty specific approach.
It is. It is.
But I mean, isn't there a potential conflict when funds use their influence to push a particular agenda?
Yeah, for sure.
Like, does that, I don't know, it seems like it kind of blurs the line between investing and activism, doesn't it?
Yeah, it's definitely a complex issue. You've got folks who argue that investors, they have a right to advocate for their values through their investments. But then you have others who worry about it potentially harming shareholder interests, if it strays too far from a profit motive.
Right.
So, for example, you've got Guidestone funds. They manage billions of dollars. They've been pushing companies to end abortion travel coverage.
Oh, wow.
Yeah. So it's not just about, where the money is invested, but how those investments are actually used to influence corporate behavior.
Right. So it's more about how you use it to make change, basically.
Yeah, exactly.
Huh.
Interesting.
And this whole trend of values-based investing, I mean, it's not new, right?
Right.
We saw it with the rise and maybe even the fall of ESG investing, environmental, social, and governance factors, that kind of thing.
Right.
And then there's other things like halal investing, which screens investments based on Islamic principles. Okay, yeah. So, for you listening, this really highlights how aligning your investments with your values, I mean, it's a personal choice. It's about putting your money where your morals are.
For sure. It's about, whether your priorities are faith-based, political, or even focused on broader social impact, your investments can reflect what really matters to you.
Right, totally. Okay, well, let's shift gears for a minute and talk about the stock market.
Mm-hmm.
Can it actually do well when the economy seems to be, struggling?
Right.
Because, let's face it, things haven't been exactly smooth sailing lately, have they?
Definitely a lot of uncertainty. That's a question that's on a lot of people's minds. And the answer might surprise you. It's possible.
Yeah.
Henry Allen over at Deutsche Bank, he recently pointed out that even though market valuations are, pretty high right now, the U.S. economy is still, as a whole, actually quite strong.
Well, hold on a second. Haven't we been hearing about, all those wildfires causing billions of dollars in damage and the California insurance industry facing a crisis?
Mm-hmm.
How does that fit into a picture of a strong economy?
Oh, absolutely. Yeah, those events, they definitely cause, economic pain, but it's important to keep the bigger picture in mind. Overall, the U.S. economy has been pretty resilient. However, if we look back, history does show us that market downturns can happen even when we don't have a full-blown recession.
Okay, but how often does that actually happen?
It's actually rarer than you might think. Only about 8 times since the 1960s.
Wow.
Yeah. And there are usually two main factors that are at play. You've got the Federal Reserve raising interest rates and then slowing economic growth. And that can really fuel fears of a recession and kind of become a self-fulfilling prophecy.
Gotcha. So basically, if things stay relatively stable and the Fed, holds off on raising rates again, those high valuations, they could potentially stick around.
Yeah, that's one possible scenario. But on the other hand, if the economy were to slow down significantly or if those rate hikes come back into play, we could see the market decline, even without a technical recession. So it's a delicate balancing act, for sure.
Okay. Well, you've given us all a lot to think about, but let's move on to a topic that's both Exciting and honestly a little unsettling, right?
Mm-hmm.
The AI revolution. I mean, how are companies even supposed to keep up with such rapid change?
Yeah. It's a lot. It can feel like trying to, I don't know, drink from a fire hose.
Right.
The pace of change is incredible, and we're seeing companies react in a lot of different ways. Some are fighting back, some are embracing the change, and then some are, well, even going public because of it.
Right. It's both amazing and slightly terrifying to me.
Yeah.
So for those companies that are kind of in the fighting back camp, what does that look like?
That's a great illustration of how I think a lot of us feel about AI. Like, what's next?
Right.
So a perfect example of companies fighting back would be the recent merger of Getty Images and Shutterstock. So these two companies used to be rivals.
Oh, wow.
Yeah. And they're joining forces to create this like massive stock image company. And they're doing this specifically to compete with those AI image generators like Midjourney.
Oh, I see. So they're basically teaming up to take on this new AI-powered competition. Interesting. Interesting. So that's the fight response. What about the flight? Are any companies basically, throwing in the towel?
Maybe not throwing in the towel, but definitely embracing the change. Think of Encyclopaedia Britannica.
Oh, wow. Yeah.
That pillar of knowledge we all remember from like back in the day. They're actually going public and they're focusing on AI learning tools through their subsidiaries.
That's amazing.
Yeah.
I mean, a 250-year-old company pivoting to AI, that's incredible. What industries should be embracing AI?
Mm.
We've talked about, images and education, but what about healthcare, cybersecurity, finance, even like manufacturing?
Yeah. All of those are ripe for disruption by AI.
Right.
Think about how AI could potentially personalize medical treatments, detect like cyber threats in real time, or even optimize supply chains.
Yeah.
We're just really scratching the surface of what's possible.
It's mind-blowing when you really think about it. But with all of this potential, is there also a risk of, overhyping AI?
Oh, yeah.
Are we maybe setting ourselves up for disappointment?
For sure. I mean, we're still in the very early stages of AI adoption.
Mm-hmm.
And we're definitely going to see some incredible success stories. But I think there's also going to be some disappointments along the way as well. The key is to remember that, AI is a tool. It's a powerful tool, but it's still a tool. And how we use it is going to ultimately determine its impact.
Right, right. I mean, it really makes you think about, for those of you listening, what does all this mean for us? I mean, for us as investors, as consumers, as people just trying to make sense of this rapidly changing world, right?
Yeah. I think it means, being aware of these trends, being willing to adapt, and maybe even being a little bit brave because, the future is definitely going to be different from the past.
Okay, so we've covered quite a bit already. Values-based investing, the stock market's, tricky relationship with the economy, and the AI revolution that's well underway.
Mm-hmm.
But before we get ahead of ourselves,
Oh, right.
we have one more crucial thing to cover. What's happening this week that you should be keeping an eye on?
So this week we have a big one. The U.S. jobs report. Remember last August when those numbers kind of took everyone by surprise and the market took a tumble?
Yeah, that was rough. Are economists hoping for better news this time around?
They are, but here's a twist. With the chances of rate cuts in 2025 fading, some bad news on the jobs front might actually be good news for investors.
Can you explain that a little more?
It really all comes down to, the Federal Reserve's actions. If the job market weakens, the Fed might be less inclined to raise interest rates, and that could actually give the market a boost.
Okay, that's some next-level market logic.
Sure.
So the jobs report is definitely on our radar. What else should we be watching?
Well, earnings announcements, starting with Delta Airlines.
Delta, didn't they take a hit last quarter because of that whole CrowdStrike outage?
They did. Yeah, so we're expecting to see some improvement in their numbers this time around, but they're still facing some challenges. Fuel costs, potential weather disruptions, and of course the impact of inflation on their revenue.
Right. Speaking of challenges, what about Constellation Brands? They're another one to keep an eye on, right?
Oh, for sure. They're facing a really tough market right now. Beer consumption is down. Their attempts to pivot to like canned cocktails and THC drinks haven't really gained traction. And then there's those potential tariffs that could really hurt their bottom line.
Oof, that's rough. So it sounds like there's a lot of potential volatility in the week ahead. Anything else we should have on our radar?
There are always developments brewing in the markets, but I think those are the big ones for this week.
Okay, good to know. Okay, well, I'm feeling a lot more optimistic about the future now, and I think we've covered a lot of ground in this deep dive, from faith-based investing to AI disruption, market trends, and the enduring value of human skills. It's been a fascinating conversation.
It really has. And remember, the conversation doesn't end here. Keep exploring, keep learning, and keep asking those tough questions.
Uh-huh.
The more informed and engaged you are, the better equipped you'll be to navigate those challenges and opportunities that lie ahead.
So well said. So to all of you listening out there, stay curious, stay informed, and most importantly, stay engaged. The future is what we make it.
Couldn't agree more. On that note, we'll leave you to ponder all the fascinating insights we've uncovered today. Thanks for joining us on this deep dive.
Until next time, keep exploring.